Good morning. This is Mayor Valensky with Driving Markets, talking about markets while driving. So let's kick off and let's see what has been driving markets yesterday and what will be driving markets today. Before we go into that, quick caveat: anything said in this piece is an opinion only. It's not investment advice, not financial advice. So let's go ahead. So yesterday, the job reports, private job reports, came in stronger than expected, and also the ISM, the manufacturing index, came in stronger than expected, and that was a dampener on equity markets. So they came to a full stop in their cycle or recent cycle of rises, and they end up going down. That brought into spectrum the fear again that the FOMC will continue with its aggressive rate hikes going forward. Now, I've said all along the aggressive rate hikes are going to continue. They're not going to stop. They're probably going to ease, in my opinion, by around about the March, April. But up until March, April, I think we're going to be talking about 5.5% to 6%, and by July next year we could be talking about 7% interest rates in the US. Something that was on the horizon, something in the news that seems to be overlooked. Russia, Putin, has cancelled the wheat agreement. The wheat agreement, or the soft grain agreement, was to export soft grains from Ukraine via Turkey. If you remember, there was a huge shortage or huge panic on soft grains, the wheat, the barleys, the corn, the soya, coming from Ukraine, because Ukraine is one of the biggest producers of grains in the world. And that war prevented the export of those grains and therefore pushed up inflation globally on the cost of living and those food products. And then back in June, Russia came to an agreement with the world, or with Turkey, that what they'll do is they will agree that those exports of grains will happen through the ports of Turkey. And Russia's just cancelled that as either a punishment or further tension rising between the East and the West, and that will have an impact overall on food products and the supply of the basic raw commodities, soft grains, to the world in order to make all the food, whatever is necessary, and put it in the stores, and that will push inflation up again. I'm not sure we're going to get the same commodity price rises we had back in February, March, because that was a shock price. That was a shock jump based on the sudden war in Ukraine. But there will be a rise in soft grains, in soft commodities, and that will definitely have an impact overall on inflation. So I can see inflation rising further as we go into the winter and into the new year 2023. Oil went up yesterday, which was interesting, went up 2%. The reason why it went up is because there is a fear of global supply. OPEC will be cutting production again. There's one thing you can guarantee: OPEC now wants to see oil at the $90 to $100 a barrel permanently. So what they'll do is they will play around with production in order to maintain that oil price at $100 or $90 or $100 a barrel on average, because that's where they want to be. So every time oil falls down, what they'll do is they'll cut production, and that will just push oil back up. So the days of seeing oil at $50 or $60 or $70 are definitely over. Now OPEC, especially Saudi Arabia, which doesn't give a damn about Joe Biden, will be pushing oil up to the $100 a barrel, and they'll maintain it there and keep it there permanently because they want the revenue, and obviously the profitability at that level is much, much, much higher. Now, with oil at $100 a barrel or more, that will not allow inflation to come down, simply because oil is a major constituent of the measure of inflation when it comes to the basket of goods. That's the cost of oil. What investors and analysts were hoping is that oil will come down to around about $80 or $75 a barrel, plus the drop in the cost of housing, and that will push inflation down to the 4%, 5%, 6%. That's not going to happen. The housing part is interesting. That will come down as rents will fall and property prices fall. Property prices will fall in 2022 to the end of the year, and the major fall will come in 2023 onwards as interest rates rise, and the cost of those mortgages with the cost of living puts a major pressure on the expenses of the consumer. So you will see properties fall by at least 10% in the beginning of 2023, and by the end of 2023 I think you're talking about a 25 to 30% fall overall in property, which will continue through to 2024. So the trend and the cycle of property, those who are traders and those who look at the property cycle, will actually be down over the next 2 years. Looking at precious metals now, silver has been hanging around the $19 level for quite a while. It looks like it's going to break out of that, so I'd be looking to take on silver. It looks like a very interesting one. Gold also is running between the $1,600 and $1,700 level. It's not breaking out either way, so buying in it, going long at 1620, and then either selling it or going short at 1700 looks like the trade range. Same with Bitcoin. Bitcoin's also range bounded, stuck at the 20,400 level. It's not really going anywhere, but I do believe that by the end of the year it's going to be around about 15,000. That is my call. Regarding Twitter, very interesting. So Elon Musk is bought Twitter. He's going to make it a free speech. Remember, the media is limiting free speech. They don't want to hear any controversial opinions or anything regarding unusual opinions, so they block you. So that's not really free speech. The Facebooks, the Instagrams, the Snapchats, okay? That is not really free speech. Twitter will now become an absolute basis of free speech, and that's Elon Musk's drive into that particular media outlet. Today you've got the final decision of the FOMC regarding interest rates in the States, coming in at 75 basis points. Very, 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 very likely, and maybe 100 unlikely on that one. And then on Friday you've got the non-farm payrolls as US unemployment figures. This is Meir Walensky with Driving Markets, talking about markets while driving. You can contact me, subscribe to me, like me, don't like me, whatever you want to do, and I'm more than happy to help. Have a good day.